So I wanted to ask you this because had I known about cost segregation, I probably would have bought bigger buildings sooner. Is there a minimum dollar amount that it doesn't make sense to do cost segregation? And is it only for big commercial properties?
That's a great question. It actually used to be much more, and that probably the reason why it's so little known is because it used to be done only by the big accounting firms that they have engineers in-house that did it, and the cost to do it was, you know, $30,000, $40,000, $50,000 to do this. Nowadays, the cost has gone down significantly because there are a number of, you know, national firms like Madison Specs out there. So the cost is going to be significantly less. Therefore, it's going to open it up to a lot more properties. My rule of thumb, generally speaking, is any property purchased for over $1 million is tremendous. You know, it's just a no-brainer. It's tremendous benefit there. Anything less than $500,000, I wouldn't push it, and I would say it's probably not going to be worth it. There's still going to be benefit there, but it's going to be marginal, and it's not, you know, probably not going to be as worth it. Okay, the cost to do such a thing on multifamily properties, for example, is, you know, anywhere between $4,000 and $6,000. Could be a little more for much larger properties. That cost, okay, if you're getting you know, $100,000 of tax benefit, so $5,000 is marginal. It's insignificant, right? However, if you're only getting, you know, $20,000 of tax benefit, and you're paying $5,000, it doesn't make as much sense. Okay, so that's generally my rule of thumb. What I will say is that if you have any property purchased, even retroactively, you can do this. You know, in the past, it doesn't have to be in the year that you bought it. You can do it retroactively. I would reach out to get a free estimate because we provide a, you know, run the numbers so you can actually see, hey, what would this look like if I'm doing, you know, I'm not doing cost segregation, just my straight line depreciation. What's my tax benefit? Versus if I do, you know, the cost segregation, the depreciation on steroids, right? And I'm getting those tax benefits up front, what does that look like? And that's for free. It's really educational. I highly recommend it.
So I'll give the viewers a really quick, real life example. So let's say somebody's purchasing a $4 million property. And let's say that property generates $100,000 in positive cash flow after all expenses. And let's say that over the standard, you depreciate that over 39 years. Let's say it's $100,000 per year in depreciation. $100,000 in profit, $100,000 in depreciation washes it off. Now, with a cost segregation study on a $4 million property, you can depreciate about 20, maybe 20%, 25%, maybe.
It's conservative, yeah.
So let's say $1 million you can depreciate over 5, 10 to 15 years. Accelerate it versus the $100,000 per year. Now, with the bonus depreciation, instead of depreciating over 5, 10 years, you can take all of that on the first year, which means you get to depreciate $1 million the first year. Now, if you make 500,000, that wipes out that entire $500,000 profit that you made, and now essentially you pay $0 in federal taxes for the next $1 million because that bonus depreciation. What it means is that you have all this money left over that you saved on taxes, and now you can do it all over again. Right. Now you have all that money you saved on taxes. Now you go out, you buy another property, a big property, you do the cost segregation study again, do the bonus depreciation,